everyone, I welcome you all to today's session. So today's topic of discussion is Unit 16, Financial Literacy and Financial Inclusion. So we are going to discuss this chapter completely. So let's start discussing what is financial inclusion and what is financial literacy with a very basic introduction. First of all, if we talk about the financial inclusion means connecting maximum people to the financial system of the economy. It means that more and more people should be connected to the financial system. Like more people have the access of bank, they have bank account, they should be connected to the financial system of the economy. And for this, there is a term which is used that is known as financial inclusion, means to include each and every individual with the financial system of the economy. That is known as the financial inclusion. Okay. Next, if we talk about the business facilitator, the use of business facilitators and correspondence for financial inclusion. Now, financial inclusion aims at connecting maximum people to the financial system of the economy. This is what the financial inclusion want. So obviously, banks are using different business facilitators as well as correspondents, which helps the bank in financial inclusion. It means that these business facilitator and correspondents, they act as an extended arms of the bank. So bank, because it is not possible for a bank to maybe present in each and every area or secluded area, so bank always need help of some extended arms which are known as the business facilitator or correspondent, which actually provide banking services on the behalf of banking. They act as a helper to bank to include the person which don't have the facility of connecting with the bank. So these basically helps the bank to include a maximum people toward the financial system of the economy. Now if we talk about the business facilitator model, bank may use intermediaries. Now what are intermediaries? Like, there are non-government organizations, self-help group, farmer club, community based organization, rural outlet, insurance agent, panchayats, village knowledge, khadi and village industries board. So these all work as a business facilitator for the bank. Business facilitator termed as an intermediaries for the bank, which provides the functions of the bank to the third party. As well as there are different business correspondents also. Now individuals like who are the retired bank employees, retired teacher, government employees, individual owners of kirana, medical and fair price shop, individual who owns a small petrol pump, small saving scheme. So these are those individuals which are permitted for the business correspondence model. So these are those who are working as the business correspondents, and these are those who are working as the business facilitator. The main objective of business facilitator as well as the correspondent is to provide services on the behalf of the bank, so that more and more people can feel or can be connected to the financial system of the economy. Okay. Now if we talk about the next thing, financial inclusion by extension of banking services. So the condition for engaging NBFCs as banking correspondents are. So what are the condition for NBFCs, non-banking financial companies, to work as a business correspondent? This is very important. First of all, the bank need to ensure that there should be no mixing of fund of NBFC non-deposit with the bank. So the seclusion of the fund is very compulsory if NBFC want to work as a business correspondence. A special contractual arrangement should be there between these two, so that any type of conflict of interest can be avoided. Bank need to ensure that NBFC non-deposit does not adopt any restrictive practices, such as they cannot offer some saving or remittance function only to their own customers, or force bundling of the services to another. Okay, so these are the conditions for which, if the NBFCs are following these conditions, then they can work as a business correspondent. First of all, bank need to ensure that both have no mixing of fund. There should be contractual agreement between those two to avoid the unnecessary conflict. And third, there should be cautious taken by the bank that NBFC shouldn't be taking any restrictive measures like serving their only own customer, okay, or enhancing their own customer rather than bank's customer. Okay, next, if we talk about the terms and condition for which the business facilitator and correspondents work for the bank are, first of all, they can charge fees or commission. So bank provides some fees and commission to this BF and BCs to work on the behalf of themselves. Second, they should adopt such technology which actually enhance the customer experience and helps them giving the same facility which the bank is providing. Sometimes banks often help BC and BF to set up these technologies. Risk mitigating measures. So obviously banks should take some risk mitigating measures to so as to avoid some risk that are involved while the services is being rented by given by or rendered by BCs or BF on the behalf of banks. So obviously business facilitator and business correspondent banks should have a strict eyes on these so that they cannot be posing any reputational or financial risk to the bank. Okay, now next, if we talk about the ultra small branch, now there is something which is known as ultra small branch, and it is also a way to enhance the financial inclusion in the economy. Now, RBI has permitted banks to establish outlets which is known as ultra small branches in rural centers. They are low cost, simple brick and mortar structure, so they need not to have spent on complete infrastructure. They have just low cost simple brick and mortar structure. Every business correspondence outlet is under the oversight of a base branch. So whoever the business correspondent area and working is, they are looked out by a base branch. These ultra small branch may be set up between the base branch and BC's location so as to provide the support to about 8 to 10 BC units at a reasonable distance of 3 to 4 kilometers. So there is a base branch. Okay, now there is a business correspondent who is serving to the rural people's rural areas. They are connecting people to the banking system. Now, in between these two, there is the ultra small branches which are set up under the permission of RBI, which actually assist this business correspondent, 8 to 10 business correspondent unit to provide a better functioning to the customer. And each business correspondent unit is overlooked by the base branch. So this is the structure of which the service being rendered to the rural areas. Now next, readdressal of the grievances. So there are many services which are given by the business correspondents and business facilitator. Now obviously there are some grievances also which are related to this. Now how to solve and how to address these grievances? First of all, banks should have a grievances readdressal machinery for readdressing complaints and services that has been rendered by business correspondents or facilitator. So banks should have a grievance readdressal unit, especially for those services which are rented by these BCs and BF. The procedures and the time frame for responding the complaint should be placed on the bank website. So what is the procedure? How you can reach to the bank grievance machinery unit or readdressal unit, or what is the time frame in which this can be fixed? This need to be placed in the bank website. Okay, so bank website has the full disclosure of how to reach them. Okay, if the complaint does not have a satisfactory response from the branch within 60 days, then they will have an option to approach to the office of banking ombudsman for the readdressal of the grievances. Now if the bank has not given a proper uh, commitment or a proper solution for the grievance within 60 days of receiving of the complaint, then they are allowed, or they have an option to reach to the banking ombudsman office for their complaint, for the readdressal and the solving of their complaints. Okay, now if we talk about the payments bank, so there are small, ultra small branches, which I have already told you. Now there are payments bank. Payments bank again is a way to include people to the financial system of the economy. Now, what is payment bank? The objective of the payment bank is to further financial inclusion, add further financial inclusion by providing, first of all, they are providing small saving accounts, small accounts which in which the demand deposit is acceptable up to the amount of rupees 2 lakh. Second, the payment remittance to migrant labor workforce, low income household, other organized sector and small business. So especially these are those sectors which are excluded or left secluded from the bank, like the small or migrant worker or the labor workforce. So for the convenience of these, for the payment and remittance services that has been provided to the laborers, workforce, low income household, small person, unorganized sectors, so for these, there is a payment bank. Now, payment bank is what? Is a way to include or increase financial inclusion. Now, what are the activities of the payment bank? First of all, they can accept the demand deposit, but the limit is 2 lakh per customer. They can issue the debit cards, prepaid instrument, internet banking services are provided by them, payment and remittance services are provided by them, especially to the labor workforce, especially to the small banks, etc. Distribution of simple financial product like mutual funds and insurance, utility bill payment. So these are all the scope of the businesses and activities that has been rendered by by payment. Okay, now payment banks which remote in the operate areas, they operate mostly through business correspondence. This is very important, remember. So most of the payment bank which are operating in the rural areas, they are operating with the help of business correspondent, ATMs and other network. They need to have at least 25% physical access point, include business correspondent in the rural centers. So they should have at least 25% of the physical access point in the rural areas, which include the business correspondent also. The very important thing, what is the limit of the paying bank? The limit of the paying bank in which they are accepting the demand deposit is rupees 2 lakh per customer. Clear? Okay, now next, if we talk about the digital onboarding. Now, digital onboarding, the two broad areas for the digital onboarding are, first of all, you can improve the accessibility of the financial platform using the financial technology. So if you are including digitalization in your financial system, the very first step is to include financial technology in their financial platform. Second, you should analyze potential risk that arise out of introducing the fintech. If you are introducing new financial technology to the banking environment, you are introducing new app, you are adding on some features on your app. Now, this is the one way. Second thing is what? You should be aware or make aware of yourself that what should be the potential risk that can be arise from this digital onboarding. Okay, so first of all, introduce. Second of all, analyze and be aware of the risk that comes with the financial technology. Clear? Okay, next. Now, we are talking about the financial literacy. Now, what is financial literacy? So, financial inclusion means including maximum people with the financial system of the economy, that is known as the financial inclusion. Okay, now financial literacy is what? Financial literacy is a process by which people improve their knowledge or understanding of the financial system. When you are making yourself aware of the uses of the products, of the things, of the services that is being available in the financial system for you, then you are known that you are in the process of financial literacy. Means making yourself understanding the use of financial product and services. It also describe as one ability to make informed judgment and to take effective decision. See, for example, there is an ATM. ATM is the digital onboarding thing. So you have introduced some new financial technology thing in the financial system. Now, if you are making yourself aware of how to use ATM, how to withdraw money from the ATM, how to print your passbook, how to set up your PIN in the ATM. So these are all the process of the financial literacy. Means making yourself aware, you making yourself understandable of what the financial services the bank is providing you and for what purpose they are providing you. Now, always remember, this is very important. Financial inclusion and literacy, they are the twin pillar. If we talk about the financial literacy, when you are literate means you are aware of the products which are being available to you. Now, it actually creates your demand. Okay, so financial literacy always stimulates the demand side. Why? Because if you are aware, okay, that this is the loan facility, this is the mutual fund facility, this is the investment facility which the banking is providing us. So this actually make you aware of the product, and that's why your demands stimulate, your demand will rise. If you are aware of the financial system, then the demand will arise. And awareness of the financial system is what financial literacy means. That's why always remember, financial literacy means creating of the demand within yourself or stimulating the demand within yourself. Now, financial inclusion activities stimulates the supply side. Why? Because see, financial inclusion provide you the access of the financial market. It actually make efforts to connect you with the financial system of the economy, and that's why financial inclusion actually fulfill your demand by providing the supply of this. If you are aware, so for example, a bank has run some campaign through which you are aware of the loan facility of the bank. Now, when you are aware of the loan facility, that is financial literacy. Now it creates demand, means you are demanding the loan facility. Now it if creates demand, then you need a supply, and for supply there is a financial inclusion activities that are done by business correspondent and facilitator. They help you in accessing the loan services from the bank. This is known as the twin pillar. Financial literacy always stimulates demand. Financial inclusion always stimulates the supply. It actually fulfill your demand by providing the supply of the financial services. Okay, next. Now, different initiative has been taken by Reserve Bank of India in this financial literacy process. Now, what are the different steps? First of all, there is National Center for Financial Education. So, National Center of Financial Education, it was set up in 2013, and it was set up with the help of the financial sector's regulator like RBI, like SEBI, Securities and Exchange Board of India, IRDAI, and PFRDA. So it actually, what the objective of this is to include financial literacy and inclusion in India in a collaborative manner. So National Center for Financial Education helps to make aware of the people that what are the financial services that are presented by RBI for all the individual. Okay, next, there are centers for financial literacy like CFS. So, in order to promote inclusive growth and deepens the financial inclusion thing, there is a pilot project which has been launched by RBI in year 2017, which is known as the Centers for Financial Literacy. It actually hires some NGOs or some selected bank in spread financial literacy amongst the public or community. So it actually takes the help of some NGOs and some banks to run some campaign which actually make the people aware of what are the financial services that are available for themselves. Okay. Lastly, there is RSETI, the full form. First, you have to learn the full form. The full form is Rural Self-Employment Training Institute. This is the initiative of Ministry of Rural Development. Okay, and it is actually to provide a dedicated infrastructure in each district that helps in the upgradation of a skill and technology in the youth, especially because if there is an upgradation of skills and technology in the youth, then it makes the future better for them, as well as they get employment in a good sector. So these are managed by these units, which actually helps the youth in building up their skill and technology. These are managed by bank with the very active cooperation of the government of India and the state government. The initiative is based on the model Rural Development and Self-Employment Training Institute of 1962. The main objective is, first of all, the training offered a demand driven, means the training which is given to the youth is actually for the demand, whatever the youth are demanding. For example, there is a lack of financial technology or financial literacy among them. So whatever the demand of that youth, the training is actually offered cater that demand. Area in which the training is provided to the trainee to be decisive to the candidate's aptitude, hand holding support with the credit linkage to bank. Not only they provide the training to the youth, but they also provide the hand shaking thing or hand holding support. For example, they provide you the credit facilities from the bank also if you want to set up your own business or employment. Escort services to be provided for at least 2 years, soon to be ensured sustainability of the micro enterprises training. So for approximately 2 years, there is a services for micro enterprises training that actually gives you the training as well as escort you to the area which actually provides you the job of the same. Lastly, the trainings to be provided intensively short-term residential self-employment training with free food and accommodation. So whoever the trainees are enrolled in this program, they are provided with the free accommodation as well as the meal services. So this is the government initiative in order to enhance the skill and the technology in the youth, and this is known as Rural Self-Employment Training Institute. Ministry of Rural Development is responsible for this. Okay, so this is the complete chapter. This is the financial inclusion and financial technology, sorry, financial inclusion and financial literacy thing. Okay, so thank you so much. I hope that you have enjoyed this session. Just please keep on liking and sharing the video, and just please give the maximum feedbacks and rating to the session. Thank you so much. Take care, everyone. Bye bye, guys. Take care.